Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video. Hope everybody had a very beautiful weekend. And it's that time of the week again, guys, where we go over the top 5 options plays for the upcoming week. All of these options plays are going to be for selling options, guys, more specifically selling puts as part of the larger put wheel strategy. Now, keeping in mind, guys, selling puts is a very, very easy strategy, and we're looking to produce income while doing so. A quick example, guys, would be if we were looking to sell AMD puts, let's say, at the 152.5 strike, we would collect 60 cents or otherwise $60 for the week by writing these puts. And if ever we're assigned these shares at the strike price, we will then look to write covered calls on the position to generate even more premium in our pockets. So it's basically a premium generation strategy, guys, a very, very easy strategy to run, whether you're a beginner, intermediate, or advanced investor. If you haven't seen my full video on how to run this option strategy, where I break down in detail all the rules of the strategy and how I do my stock selection for it, I'll leave it linked in the top right corner right now, where I did a 30-minute video on the subject, and also leave the link to that video down in the description if you want to see more. So in today's video, guys, we're going to go over a few of the strategy rules very briefly. Number 2, we're going to take a look at last week's top 5 options plays and see how those performed. And lastly, take a look at this week's top 5 options plays, of course. So without further ado, guys, let's get right into today's video. So in the context of these current markets, guys, we obviously are in a very beautiful daily uptrend on the SPY, right? No secret there. Gorgeous, gorgeous, gorgeous daily uptrend. However, we are coming into slightly overbought conditions on the daily on the SPY and almost overbought conditions on the QQQs. Our lower time frames, such as the 4-hour, are a little bit overbought. So we will potentially be looking for a small little pullback early on in the week, something like this. And a little bit of a pullback means that it's the perfect opportunity to be writing some put options, because we always want to be writing puts usually on a red day. More context for the week, guys, we don't have any real big macroeconomic data events this week to move the market. So this week should be a fairly light week in terms of market moving events. That being said, we do have a lot of earnings coming up here, notably the big one on Wednesday, which will be Nvidia, right? So no market moving events in terms of macro, but the Nvidia earnings after the close on Wednesday could be enough to move the mark on the markets for the remaining 2 days of trading. We want to be writing all of our puts in the Monday or Tuesday session leading into this, right? So that being said, guys, let's jump into a bit of the strategy rules, and then I'll take you through last week's top 5 options plays. So a bit of the rules, we're going to go over these very quickly, guys. Number 1, solid company. Always write puts on companies that you want to own. It has to be a solid company, guys. This is the number 1 rule in the book for a specific reason, that if you get assigned a stock that you're not comfortable with and that you don't have high conviction on, managing the trade will be quite cumbersome. So only ever write puts on companies that you want to own at the strike price where you want to own them at. Number 2, we want to be writing stocks on a monthly uptrend or that are in a long-term range. This just once again adds to our probabilities of not being assigned. If ever we do get assigned, it's not a bad thing. However, all of these rules are going to do the most in terms of putting all the probabilities on our side to not be assigned and to just collect that juicy premium by the week end. Number 3, the stock needs to have no earnings this week. So earnings can be a very, very volatile event, and we've seen it a bunch of times this quarter where companies have reported very beautiful numbers only to have their stocks dump 10, 12, 15% after their earnings. Very volatile event, guys, and if you want to make the most out of the strategy, just don't write any puts on companies that have earnings this week. It's a very unpredictable event, guys, and you just want to avoid any nasty surprises to the downside. Number 4, we want to be writing puts on stocks that are at a big area of support or a big area of a breakout retest. All the stocks that I always feature on the channel, guys, will follow one of those 2 rules. So I bring up this example all the time of Autodesk, right? Writing puts at support would just be writing puts in this lower end of this massive support range right here around the 190 on Autodesk. That's a support trade. In terms of the breakout retest trade, well, we have a nice weekly momentum to the upside, breaking our support, our resistance level to the upside, and then retesting it as the support. This back test of support is otherwise known as the breakout retest trade, and taking a trade at this location right here for continuation is a very high probability trade. So most of the trades that you see on the channel will respect one of these 2 criterias, either being in a big support area or a condition of breakout retest. Now, these next 2 points go hand in hand. We want to be writing options on a red or a flat day, guys, and that is because all of the options have what you call an expected move for the week. That is just a probability that Wall Street applies to determine whether or not how much a stock is going to go up and down over a given week. So let's take example Amazon right here for the given week. You can see expected move is about 2.3%. We want to be targeting the lower end of this range right here around the 180.52 mark. So obviously if Amazon has a red day on a Monday or on a Tuesday, it'll bring us down lower and lower into this expected move zone. And we want to be writing under that expected move zone, right? So couple these hand in hand. If you can find things that are on a red or flat day, and then couple that with writing under the expected move, it really adds the probabilities in our favor that we are going to get a bounce trade happening midway through the week. Couple that once again with a big support area, guys, and you have all the probabilities on your side of not being assigned and just collecting all that juicy premium. Now, before last, we want to be writing 0.5% to 1% in weekly premium. Now, this is the art format of options. This is a level I've derived after years and years of trading this strategy successfully to where you get a very good balance of ROI on an annualized basis and a level of risk, right? So usually if you're always writing between 0.5% to 1% in weekly premium, you should get the best of both worlds. You should make a decent amount of money for your exposure, but not take on so much assignment risk, right? So what does this mean, 0.5 to 1%? You want to be looking for premium that respects the 0.5% to 1% rule. So if we take in consideration AMD, for example, right? 0.5%, you just take the strike price right here and divide it by 2 and look for that cent increments on the strike, on the bid right here. So half of 155 would be roughly, let's call it about, anywhere between 77 cents, right? So we need to see at least 77 cents on the bid, which is our 0.5% rule to get into this trade. Now, obviously we have the 98 cents right here, which is above our 0.5% rule. So this trade would indeed qualify. So those are the premium targets that I'm looking for. Anything under 0.5%, you just don't make enough money, guys, for it to be worth it for the amount of exposure. And over 1%, as you can see with this strike price right here, the 160s, it is just too close to the current stock price, guys. Your risk of being assigned is too great. So this 0.5% rule to 1% rule is a great little safety area that usually provides good money, but doesn't provide you that much assignment risk. Hope that makes sense. And lastly, we just want to take profit at 90% of the contract value. The beautiful thing about this strategy, guys, is it's so easy to run and it's so passive. You set up your positions on a Monday or Tuesday and then pretty much just let the time decay do the work for you in terms of the options premium, right? So very, very good way to just secure profits if you're not at your computer for the rest of the week. Just set a take profit limit order at 90% of the contract value. So let's say you were to write, in a theoretical example, of course, these 155s on AMD at about 98 cents, you would set a take profit order at about 10 cents to just, if ever throughout the week you're not at your computer, that contract hits 10 cents, it just closes the trade and you make 90% profit. Easy peasy, guys. So that's pretty much everything for your strategy rules. Now let's jump right into our top 5 options plays of last week and see how those performed. So the first one we were looking at was Apple. And what we were looking at for Apple, guys, was a potential retest of this 180 to 178 zone. When we recorded this video, right, last weekend, the stock was pretty much trading at the 184 as of 2 Fridays ago in terms of the close. So we were really looking for Apple to come down into this zone and provide us an opportunity for entry. However, Apple really didn't pull back enough for us to get that entry, guys, to the 180 or 177.50. So unfortunately, there was just no trade for that week on Apple. Monday, it temporarily dipped as low as about 182.50. There just wasn't really enough premium down here at the 180s or even at the 177.5s to take this trade. So unfortunately, this was a no trade event for us, but the idea was good, guys. We were targeting this big area of support, and if it would have pulled down into there, it would have been a very juicy trade to take. Unfortunately, since the stock just moved away from us all week, there was just no trade to be had. So we have to put this one on the back burner for a future date. Now, the trade number 2 that we were looking at was Palantir. And Palantir, we were looking at this one anywhere below $20, right? So we wanted $20 and $19.50. And as a matter of fact, on the Monday morning session, we did open down here in the 20.5 range, which did give us some entries for the $20 contract and even as low as the $19.50 contract. So if you would have taken one of those two positions, either the 20s or the 19.5s, it would have been a very decent trade as Palantir just pulled away from that area the rest of the week. All of the premium collected in this region right here would have ended up in your pocket. So that was was a very juicy trade, guys. Very happy with the way this one played out. Congratulations to anybody that took that one. The third trade we were looking at was Uber. Uber was another one where we were looking for it to come back down into this 200-day moving average and even possibly come down into this level of support, right? So we were targeting 63 and below, which was the area below the expected move for last week. Now, in terms of how the trading played out, guys, Monday and Tuesday, the stock did dip down below 65, and that did open up the $63 and $62 contracts. So if anybody was able to take that trade, it would have been a very good trade as Uber remained above those price levels the remainder of the week. Very juicy trade to be had. Congratulations to everybody that took this one. This one was one that I took myself on the Tuesday session. You could have seen that in my portfolio updates over the course of last week. So very, very nice trade on Uber. Now, the next one we were looking at, guys, was AMD. So AMD had obviously been crushed as of lately, guys, and was trying for the daily trend reversal. So when we recorded the video last Sunday, we were targeting these prices right here. Lower 150s, and the expected move last week was about 146. We wanted anything below 146. So at this point on the Monday morning open, right, we came right down into here in the 150 range. It did open up the 146, 145s, and even a little bit of premium on the 144. So if you would have taken any which one of those trades, guys, 146, 145, 144, you would have been heavily rewarded as AMD stock just skyrocketed thereafter. So any premium that you would have written on the Monday session would have pretty much came worthless all throughout the week. So congratulations to all of you who took that AMD trade. This was a very, very nice trade to be had in that level right there. Another win for us. Now, next, we were looking at Airbnb. Same concept, guys. We were looking for Airbnb right in this level of support zone right down here. We were talking about 143, 142, all the way down to 140. However much premium you could have gotten while getting the lowest strike price available possible. It was a very juicy trade here, guys, right? As obviously, AMD stock did close well above all of those strike prices. It closed above 143, 142, 141. So it was looking very, very good over the course of the week, guys, really maintaining this 200-day moving average on the stock. So very, very juicy trade. Congratulations again to everybody who took this one. Another winner on the channel, guys. It was a very, very nice trade into this larger form support zone, right? This lower 140 range. Now, moving into our last one we were targeting, this one was the bonus play, and we were looking for Elf Beauty. Elf Beauty, we had a large margin of safety, guys. We were looking for 150 and below. I took this trade myself over the course of the week. You could have seen that last week in my portfolio updates midway throughout the week. We took the 149s. We went very conservative with it in this larger area of green box of support and right against our 200 daily moving average. This trade obviously pretty much ended worthless with all premium in our pocket as Elf Beauty did close the week above that whole 150 zone, never really getting below the 158 marker. So if you took this one on the Monday or the Tuesday session for premium all the way down here, you would have been heavily rewarded. So congratulations, guys. Another win. All of the trades last week, if you would have taken them, all turned out to be very nice wins. So congratulations to all traders out there who were able to make these plays possible. Now, that's everything for last week's plays. Let's dive into this week's plays, guys, and you'll see that a lot of them are recurring, right? Why are they coming back? Well, because they're still within our areas of support, and I still do believe them to be very good trades. So all the while that they're still in our areas of support, guys, I will still be playing these stocks specifically. So number one will be Palantir once again. Palantir, same zone. Let's take a look at the expected move for the week, guys. The expected move is about 20.92. So we want to be writing puts below the expected move of 20.92, targeting these lower areas, 20.5, all the way down even maybe to the $20 mark. So let's take a look at Palantir stock and see if any premium is available on those two strike prices, right? So let's take a look here and see how low can we get on Palantir. Can we get 20.5? Can we get 20 while still respecting our rules for premium, meaning the 0.5% rule, right? So let's take a look right here. We have the Palantir strikes up right now, and you can see, guys, that the 20.5s are not quite there yet. We would need to see at least 10 cents on the bid, and for the 20s, not even possible at all, guys. Just not enough premium there. You need to see 10 cents. So what we need to see on Palantir on the Monday or Tuesday session, we need to see a little bit of a dip here. If we can see Palantir having a little bit of a dip coming down into the lower 21s, that will most likely open up these 20.5s, guys. We want to target these 20.5s or the $20, getting about 10 cents on the bid for it to be worth our while to get into this trade. Palantir, this green box right here, a very juicy area, prior support, resistance, and now coming into support as well. We are just looking for the monthly higher low. So our long-term bulls are the ones sitting there. That's why I'm so confident in this trade location right there. However, as I said, we do need a little bit of a move down here, guys, to open up the premium on these lower strikes. So be patient with it. Monday and Tuesday, there could be a nice trade opportunity on Palantir to once again try and pick these lower levels for some short puts. Now, trade number 2 is going to be another one that we had last week. This one is going to be AMD once again. So AMD finally completing its daily trend change, looking very good. So what we're expecting on AMD potentially is a little bit of a retest of these lower areas right down here, this time as support. So if we get a little bit of a pullback here Monday or Tuesday, here's the trading plan. The expected move for the week is 156.12. So we want to be writing puts below this expected move. Think 155, 154, all the way down to 150. As low as we can get, guys. As low as we can get while still respecting our 0.5% premium rule. So let's take a look at some of those AMD options, guys, and see where we're at in terms of the options chain, right? And see if we can get how low we can get some of that premium at, right? So the stock's currently trading about 164, and towards our expected move, we have a decent amount of cushion, guys, about 5% to the downside, right? So if AMD has a little bit of a red day on Monday or Tuesday, it could open up a few lower strikes, right? So that being said, let's take a look at the premiums right now, and you'll see on the screen, we do have the 155s presenting 98 cents. That is above our 0.5% rule, right? 0.5% would be about 77 cents. This is well above. I potentially want to be going a little bit greedier down the strikes. I would like to see some premium available in the 150-250s, maybe even the 150s, right? So if AMD has a little bit of a red day on Monday or maybe even Tuesday as the overall markets maybe pull back from last week's gain, we could maybe get an opening, guys, down in here, the 150-250s. And I'll tell you right now, if I see 77 cents or 75 cents on these 152s Monday or Tuesday, I probably will be taking the trade. Now, keep in mind these levels, guys, you have to use your logic, right? If AMD for some reason opens up 3-4% to the downside tomorrow and comes down 158, 157 on Monday and Tuesday, well, we're not going to be writing super close, right? We need to go even lower. So if it opens down, 158, 157 Monday or Tuesday, go even lower, maybe even target the 150 strike or even 149 if you can find that 70, 75 cent premium on those bids. So that's how I'm looking to play AMD over the course of this week. Now, moving into our third stock, guys, we are going to cover Airbnb. Give me a quick second. And let's get into Airbnb right away. So Airbnb, another recurring trade on this channel. Why? Because it's coming into this gorgeous area of support, talking about the 142 all the way down to about 131. I know it's a wide range, but keep in mind our long-term bulls are trying to set up for the monthly higher low for the further trend continuation. Our monthly moving averages are right down here as well in the 141 pocket. So that being said, the expected move for the week is 141.96, almost 142. So we want to be looking to get premium below this level. Think 140, 139, right? So let's take a look at Airbnb and see, is there any premium available at the 140 or even 139 strike, right? Let's take a look. So pulling up the Airbnb options rather, you can see here that we only get 0.5%, roughly at the $142 mark. Half of 142 is about 71, so you need to see about 71 cents on the bid, and we have that right here at 142. 142 is literally the expected move. So you can see AMD here still struggling after earnings. If ever we get the bearish daily downtrend follow through here, guys, let's say we open up tomorrow morning or Tuesday, 143, 142 even, well, that's going to open up even lower strikes, guys. We want to go as low as possible in this options chain while still getting 0.5% on the bid. So the strikes I'll be most likely looking for, guys, is 141, 140, 139, depending on the magnitude of the drop on Monday or Tuesday morning. So we want to be getting, 141, 140, 139 as low as we can possibly get, guys. That is the art of the game right now. So these are the three strikes that I'll be looking at. Once again, quick reminder, need to see at least 65, 70 cents on the bid to make these worthwhile. So just watch out for this drop. And obviously, guys, if for ever which reason Airbnb drops 4 or 5% tomorrow morning, let's say they have a brutal day, right, and open all the way down here below the expected move into 140, 139, we're not going to be writing the 140, 139 at that point. We have to go even lower while still respecting our 0.5% rule. So just use that wisely, guys. Right now, into the next trade for the week, we are once again going to be targeting Uber. Why? Because Uber, similar to Airbnb, is currently on a gorgeous monthly uptrend, and we're still hunting for that monthly higher low. This green box is the area that I'm targeting personally, right? That is about 61, let's call it, all the way down to about $56. So in terms of the Uber play, very simple. The expected move for the week is about 63.75. So we want to be going below that expected move since think 63, 62, $61, as close as we can get, guys, to this juicy level of support where our longer term bulls are just sitting there waiting to be able to bid this stock. So let's take a look at Uber's premium and see what can we possibly find below the expected move of 63.74. Now, taking a look at Uber's chain right now, we can see here that, well, unfortunately, guys, the best premium you can get right now is about $63, right? So there's not much, right? The expected move, $63.94. We already have a little bit of premium at the 63s, but you'd need to see about 31, 32 cents on this bid for it to make it worth your while. So it's just not quite there yet. So in terms of Uber, what we're looking for on the Monday or Tuesday morning session is a little bit of a pullback. If we can get a pullback on Uber down into the expected move, since think 64, even high 63s, that may well open up the 62, 61, maybe even 60 strike, depending on the size of the move and the momentum that it has, right? If this drops 3-4% on a Monday morning, then most likely, guys, you will have the $60 strike open up, right? So those are the strikes that I'll be looking for this week: 62, 61, $60, depending on the magnitude of the drop. If we can find 0.5%, wherever we can find that 0.5%, guys, keep in mind, 200 daily moving average is right there at 62. And we do have this larger area of support, 60 all the way down to 56. So even if we do get assigned the stock, guys, the maximum drawdown is not that bad. We do have a gorgeous pocket of support right here. So that is the trade that I will be looking to make on Uber specifically. Now, another one we're going to take a look at, guys, is a more, a more stable stock than a few of them on the list prior, right? So that's going to be Amazon. So Amazon right now is on an absolute tear. However, we are having a little bit of a pullback, guys, and pullback just means opportunity. So we're looking to set the daily higher low for further trend continuation. Now, Amazon, the expected move for the week, guys, is about 181 right over here. Now, what I like about this area, guys, is that is a big area of weekly confluence. This yellow line right here is the 178. That is previous all-time high resistance, should be acting as support. Your weekly 12 EMA is right there as well. And the bulls have put up such a juicy area of support in this pocket right here. 50-day moving averages right there. I really don't think that we can get much below 179, 178 over the course of this week, right? That being said, the expected move is about 180.71. So let's see, can we find premium on Amazon stock? It is so bullish right now, right? The monthly chart is gorgeous. The weekly chart is gorgeous as well, despite having a little bit of a slight pullback next week. So we're just really looking for the continuation of this weekly uptrend. Fundamentals on the company are very amazing as well. So let's take a look at Amazon in terms of our weekly premium and see how much premium can we get, guys, below the expected move of 180.74. Now, Amazon isn't very volatile, guys, so don't expect there to be much premium there right now. As you can see, there is only about 65 cents at the 180s right now. That's not that bad. We would need to see about 90 cents for this trade to be worth it, but since it's Amazon and since it doesn't move that volatile, since it doesn't have such a volatile nature, I'm willing to sacrifice a little bit of premium just so because it's such a quality stock, right? So if we're looking for 90 cents here, I may be able to take if I can see 75, 80 cents, guys, I will take that trade. I'll sacrifice a little bit of a premium in our rules just to have such a quality stock, right? So as of now, the premium is not the best. However, if we get a little bit of a pullback on Amazon here on the Monday or Tuesday morning session, pulling down 183, 182, that will most likely open up even more premium at the 180s, maybe even the 177.50s, depending on the size of Amazon's drop on the Monday, Tuesday session, if ever we get it. So that's how I'm looking to play Amazon specifically. Still one of my favorite stocks in the market. And despite the fact that it's far away from a good area of support, guys, I really don't think the bulls are going to give back much before going for that next leg higher, which is why I'm playing this one a little bit more aggressively here and trying to target that 180 pocket. So hopefully that makes sense for everybody. So that was pretty much our 5 stocks for the week that we're going to take a very hard look at, guys. But there is another set of earnings plays that could unlock a few trades for us, and that's going to be Palo Alto Networks after the close. So I'm not advising or anything. Well, obviously none of this is financial advice anyways, right? I'm not saying to play Palo Alto. What we're trying to do, guys, is find maybe common pair or common stock picks that could go in line with Palo Alto's move. So if Palo Alto has a very brutal earnings session on the Monday after the close, let's say they go down 8, 9, 10%. They are one of your leading cybersecurity plays. What else may drop 5, 6, 7, 10% thereafter, guys? You have to look at all your other cybersecurity plays. Think of Zscaler, right? Draw these levels on your charts. Zscaler, if we come back down into maybe the 160s, 155s after the Palo Alto Network earnings, you may be able to find some plays in the 150 range. Think of other companies like Net. Right, Net is coming down into a very big area of support right now. So if Tuesday morning after Palo Alto earnings, right, if they are also affected by earnings, if we see a big one-day drop like this down into the mid 65s, it may free up some strikes down here into the lower area of support, 62, 61, $60. That's going to be a perfectly juicy area to make this trade at. And even a trade like Datadog, right? Datadog has been holding up better than most. You can see they're really doing a good job of holding this big area of support right here, 120 down to about 110. If ever they are severely affected by Palo Alto's earnings and come down, let's say 5, 6, 7% thereafter, when down maybe into the lower 110, 107s, you may be able to find some trades here, guys. 102s, 101s, next to the 200 weekly moving average, next to this big area of confluence right here, right? So those are the types of follow-up trades that I may be looking to make after Palo Alto's earnings. Obviously, Palo Alto may be a play on its own. If ever it drops, we have a very big area of support down here, 277 to 256, but this trade is a little bit of an expensive one, right, guys? To make a short put play on Palo Alto here, you know, even at 260, 255 after their earnings, let's say they drop something like this down to this zone right here, 280, and you want to write maybe the 265s prior to Friday, something like that. Well, the trade is a fairly expensive one, guys. 100 shares is about $26,000 worth of exposure. So I know not everybody has the amount of capital. So in that case, just look for common plays that could be associated with that, right? Fortinet is one. Fortinet is relatively close to a big area of support, $55 to $50. That's only a $5,500, $5,000 in capital exposure. Net is another cheap one, relatively cheap one, right down here in the mid 60s. Would only be about $6,000 of exposure. So that's maybe how I'm going to try to play Palo Alto for somewhat cheaper after their earnings, if ever earnings go down. Just a little bit of an idea for you guys, if ever you're interested in that type of stuff. So that's pretty much everything that I had for you guys today. Hope you guys enjoyed the video. If you did, as usual, consider dropping a like. Would really appreciate it for the growth of the channel. And consider subscribing to the channel if you're new here. Would love to have you here, guys. Thank you so much to each and every one of you who take the time to subscribe. I've had such a great time building the channel up to what it is today, guys. Much more content on the way, and I thank each and every one of you again. And lastly, guys, if you have any questions at all on the strategy, specifically, if there's one stock that you maybe think is good for the strategy, but you're unsure and you just want to ask me my opinion on it, definitely leave it down below in the comments and I'll be sure to answer you. Usually I get back to you guys within the first 24 hours. So that's pretty much everything, guys. Take care. I hope you have a great rest of your Sunday evening, and I'll see you guys for our Monday market recap after the close tomorrow. Take care. Happy trading and peace.